All right, good morning everyone, Richard here and welcome to the Friday edition of the Morning Bell. Guys, before we get started today, just got to quickly mention that I need to attend a function after today's session. So I might keep it short and sweet for today. Probably only have time for about 15 to 20 minutes, not the usual 30 to a little bit more. So I do apologize for that, but yeah, it requires a bit of traveling on my behalf, so I'd like to attend that. In any case, as always, I'll quickly go through the markets. We do follow the ESNQ, crude oil, gold. If we do have time, I'll quickly look at the dollar index as well. In any case, on the economic calendar today, not much happening except for the FOMC member Williams speaking a little bit later. Doesn't seem to be a high impact news event. So I see also that Twitter reported earnings. I think the stock plummeted quite a bit actually. So yeah, on the back of pretty decent earnings reports from other major companies, the recession fears are obviously still lingering in the back of investors' minds. So quickly, let's have a look at the ES. Firstly, as always. So we identified the support zone, which was at this low red warning line of a pitchfork sloping downwards. It's been tracking price during this entire decline since January this year. June, price hit the center median line of a long-term pitchfork, had a decent bounce to the upside. Price fell to obviously go to new highs, moved lower, and it was at that point that I started thinking that if we do get another move to the downside, that we're potentially dealing with a incomplete WXY pattern, or a double zigzag as it's called in Elliott wave terms. So I also think that at some stage we either have finished the A wave of the secondary, let me just mark that, of the secondary zigzag, and that we're either going to get a bounce now or still need to make another low, then a bounce, and then another move to the downside. But we mentioned on Wednesday, or when was it, Monday, that we had a little bit of resistance zone. The price would need to close above that, which it did on the 18th. Price pulled back, a little bit of support at this low 50% dash median line, and supports failed. Price moved lower. So this begs the question. This does look on a 4-hour chart. Let's quickly have a look at that. Like a zigzag, i.e. that it could have been corrective and not the start of a strong move or a bounce that I've been expecting for a while now. So this does look like a beautiful ABC. I think even if you have to measure the first leg projected from this higher low, yeah, I didn't even reach the 100%. So it could have been just a very short A, B, C. And that was it, and price now heading lower. The only other way that this could be bullish is that if this was a three-wave move, we find support, we break back above this zone, and price heads back to new highs, that price is potentially tracing out some sort of a leading diagonal. Because this does look like three waves, in my opinion. Pretty clear to see that even on a smaller time frame. So the only pattern that, is either bullish or bearish that kicks off a move, so a leading diagonal that normally runs in three waves, five waves, with subdivided in three waves each, something like that. So yeah, it'll be interesting to see by the end of today if support will step in and if we can see another move above that area. But it does look though that this was just a zigzag. Previously, we did manage to, I think, pretty clearly identify that we had an expanding triangle that ended at sort of this area, although price did miss this median line, this green line over here, and even recently it didn't reach that again. Now, my thoughts were that if price were to get a buddy leg for this leg, i.e. this one, that at least move to that 100% that I showed you before. Or partner leg as we call it, to take us here into the 3,819 sort of area. But not that didn't happen, so which begs the question is, look, the markets look pretty weak. That's pretty much all I can say. So if we can on the daily somehow find support, or the ES, not me or us, sorry, because it's not unusual for price to undershoot areas of market geometry. But if we can get a nice move back up, then I think that's a high probability area that price could reach potentially next week. But like I said, look like an ABC. We might be heading back into this lower support zone. We did get a bounce from it before. We identified the zone before. We also had momentum divergence, which is this green line here on the MACD, which is typically more significant when it happens at an area of market geometry. But yeah, the market looks pretty weak. I think I've pretty much ended there on the ES. So really we need to get a break above the 3675 to 3707 area again on the daily. So I need to find support very soon to keep some sort of a bullish outlook heading into next week. But yeah, it doesn't look like it. Looks like we'll be heading back into this area again, unfortunately. All right, let's quickly look at the Nasdaq. Hopefully Nasdaq doesn't give me issues. It's been terrible for me. I think it's the data supply. As soon as I open the Nasdaq chart, it just slows down everything. All right, I think that's sort of all right there. Okay, so same sort of thing on the Nasdaq, but here price didn't, in the beginning of this week, reach this little support zone, which is also a red warning line. Lower end of that 10,288, upper end 10,418. Moved above sort of an area, this green zone that we had previously, which is basically encompasses two different angled lines. And you can see how it's previously acted as support, a little bit of resistance, support, 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 and then finally broke above it. And at that stage, we thought we could at least get another move into the 11,514, 11,662 sort of area, which is also an area where two very, very important median lines cross. That also didn't happen. But on the NQ, price is now moving back into this area. Will it find support? And like I said, we'll only know by Monday, early next week, whether this is going to hold or not. So it's all depending on how I think the day ends. Are we going to see a very strong move lower, or are we going to test the lows and then close towards the upside of today's range? That remains to be seen. Okay. Also, but still on the NQ in the bigger picture, don't think that the correction we're looking in the overall picture has not ended. So still, I think in the future, potentially lower lows forecasted. Crude oil. All right, so I know this looks very messy, especially if you're new to these sessions. We had this previous area, we just switched to the December contract. On the November contract, we had a very nice crisp and clean area that we identified before, after a 5-wave sequence. That moved into an area again where we have multiple angled market geometry lines sloping in different directions, and we had a bounce to the upside. Picture perfect, moved into an area identified where resistance might step in prior to price reaching it. We identified that area and we had a strong rejection to the downside. Now, I did however say that if this was, after that 5-wave sequence, a first wave higher, then I would expect support to step in. We identified a very small zone here. What was it? 81.69. I will open that a little bit up now. And 82.50. The price reached was also at the low end of a channel sloping downwards for a potential B support, and that we potentially see another move to the upside to match this wave to the upside. So if we had a 5-wave sequence, still expecting that if should crude oil move higher, that it is corrective in nature, and that a decent portion of this drop to the downside could still be retraced. Potentially up to the 50, maybe even the 61.8. But yeah, there are obviously concerns with economy slowing down, all that sort of stuff. I don't know. You know, economists will say with the Saudis and the OPEC countries cutting supply costs, also reducing supply or production, that would result in higher prices. It initially did, and then we have this move back to the downside. So I'm still viewing this as a potential corrective move, might have ended. And as I mentioned on Wednesday, that price would need to overcome the 86-ish sort of level, which is where this green median line slopes down to the downside. Price did spike higher into that area, but then closed to the downside again. So now we see that price has retested the upper area of this downward sloping, this blue channel, and is pulling back a little bit. So I think if we do get another move above the 86 and a proper close above the $86 level, that I'll be more confident that this support zone that I identified previously is actually going to hold, and that we might see another leg higher, potentially break these highs was set on the 10th of October, earlier this month. Right, but again, on the downside, we see a break below this support area, 81.69, 82.50 on the upper limit of it. Then it really brings into question whether we had a 5-wave sequence to the downside, but it's just, we just had such a nice reaction from that zone that we identified previously. So nice strong move up. So potentially I'm still viewing, like I said many times now, that this was potentially just a corrective wave. So keep an eye on the 86 level. We get a nice strong break and potentially a close above that on the daily candle, then I think we got a decent chance that price will move back into this upper zone, potentially test these highs that were set on the 10th of October. All right. Gold has been following our projection extremely well. There's one of those markets we've been identifying support and resistance zones with a very high accuracy using market geometry and also using pattern analysis. Still think that this major high that was in August 2020 and then price start moving low, extremely messy, that this is potentially a complex A wave, complex B wave, and I did mark this as a C now, but you know, an A, B, C, and then a 5-wave structure to the downside to complete what we call a double zigzag. Expanded flat. What am I talking about? So you have a 3, you have a 3 that doesn't break, or sometimes almost reach the top of it, and sometimes extends a little bit above. And then, so it's a 3, 3, and then a 5 to end the structure, and then you get a strong move to the upside. So that's still my outlook of what potentially could be going on in gold. Previously, we were thinking that this low over here in July was the end of a beautiful 5-wave move. 1, 2, 3, 4, 5. And I don't know why it's marking. It should be AB, not A, B, C, D, E. It should be 1, 2, 3, 4, 5. But in any case, hopefully you see what I'm seeing here. But then price moved higher. We had a resistance zone we identified before. We said that price should need to break above that. Raise the confidence that a low actually formed for the end of for this year. If price would then break above these highs that was set in June. That didn't happen, obviously. Strong move to the downside. Since we had a 5-wave sequence down here and then we made another low, all of a sudden we have a 7-wave sequence. 1, 2, 3, 4, 5, 6, 7. And that really brought into question whether we are seeing a 5-wave move and if you can fit some sort of 5-wave structure into this. And what I came up with, I think, is still pretty legit, is that we've actually potentially dealing with the ending diagonal 5th wave, a very extended one, to be honest. And how that traces out is a 1 to a short 3, which is pretty common for the commodities, especially gold, crude oil, silver, that the 3rd wave is not necessarily longer or the longest wave in a 5-wave sequence. And now it's marking A, B, C, D, E again. But in any case, it needs to, let me just see if it would want to do that again. Guys, I'm still working on my own tool here to get something that's a little bit better on the labeling side. So that this should be 5, not an E. So I do apologize for that. But hopefully you're seeing what I'm seeing here. So 1, 2, 3, 4, that fails to break into the area of 1, so that's legit. And then your fifth wave is actually going as a 1, a 2, a 3, a 4. And I was saying for this still to work out prior to price reaching the 1732 to 1743 level, that we'll need to see a rejection from that area, and we had a beautiful rejection to the downside. And at that stage, we're saying with pretty high confidence, or there's a high probability, should I say, that we're going to see price test these lows. And that could potentially be that last final fifth wave of an ending diagonal, which might be very close to finishing. It actually, price, I think today, breached the low, this low that was set on the 28th of September. That low was at 1622.2, and today's low was at 1621.1. So it just pipped that previous low, and it's looking like it wants to go higher. But anyway, I would like price to reach this lower channel line again, go into the 1587 ish to 1615 sort of an area, then get a nice reaction to the upside that breaks above this downward sloping orange trend line here, which basically just shows you the shape of what I'm still thinking could be an ending diagonal. And if that does happen, then I think that will raise my confidence that we potentially completed a very, very messy fourth wave correction in the bigger picture. So I'm still viewing this as potentially a fourth wave, that this was some sort of third wave, or if this was a fifth wave, that this is just a complex expanded flat. All right, so price hasn't reached its support zone just yet, so my thinking is that it still could do, but for the time being, we were done pretty well. I like how price has been following this projection to the downside. It's pretty much all I want to say there. All right, how are we doing for time? Okay, let's do the dollar index quickly. If you guys also got any questions, then please feel free to ask. Drop your questions in the chat box. I'll be more than happy to answer that for you guys. Okay. And here we're sitting with a dollar index. It's on a weekly time frame. I don't have live data, so this is end of day data. Previously, I have drawn channel lines that I doubled up to the upside. I think this is the operating angle of the dollar index going back for a very long period of time. And we also have the standard pitchfork sloping to the upside using the 3 most prominent anchor points prior to this move to the upside. That gave us a zone. Price hit this upper channel line, this blue line. It's actually a little bit higher. I should update this a little bit, which was around 114.46 plus minus. And above that, we have this upper channel line, or sorry, not channel line, upper median line of this green pitchfork, standard pitchfork, which price has not reached yet. So again, guys, this is end of day data on a weekly time frame. We did get a pretty decent reaction from that zone prior to price reaching it. We identified that zone. It begs the question, does price still want to first now touch that upper channel line, or sorry, median line, and then we get a move to the downside? Because this still looks excessively impulsive. Right, so I'm still thinking this is potentially part of a third wave going from this low over here. 1, 2, potentially a third if price hits this area, or maybe even still goes lower, with a fourth maybe moving all the way back into the center median line of this green pitchfork, which is typically an area where fourth waves will pull back into around about 106 sort of area, and then at a later stage we get that fifth wave, or that was a third, this was the fourth, and now we're getting an extended fifth that's not completed yet. Either case, strong overhead resistance in my opinion, whether it's now going to fail to make or go above the end week of the September, because this is a weekly time frame, or we're going to still make another high and then come lower. But yeah, this will obviously help gold out if price does move higher or drops from current levels. And with gold also being so close to that potential support zone, we might see a reversal in that market. Right, guys, like I said, I need to attend a function. It was about 20 minutes that I'm in right now. If you got any questions, then please let me know, guys. Otherwise, I'm going to end it there. I quickly got to upload the YouTube video as well. Send it out to subscribers, and then I'll be back again on Monday. Same time. All right. Cool. Doesn't look like there's any questions. Thanks so very much for attending, guys. Have a fantastic rest of your day. Great weekend. And Cameron says, I don't have a clue what you're talking about. Cameron, please attend more of these sessions and please ask me any questions. I use market geometry. You might want to look into some pitchfork work a little bit there from Dr. Alan Andrews that created the pitchfork. It's a little bit of a different analysis. What I like to do is frame the markets in the confines of angular support and resistance, and you quite often see prices get drawn towards these lines. Now I use multiple lines. I know that it looks pretty messy to the untrained eye, but I think if you were to attend a few more sessions, then Cameron, you'll quickly start getting a good idea of what it is that I'm looking at and how I approach things. So sorry about that if you don't have any clue what I'm talking about, Cameron, but I do promise you, if you attend more of these sessions, maybe ask me some more questions, maybe from Monday onwards, that I'll be more than happy to help you out there. All right, cool, guys. Thanks very much for watching. Like I said, have a great weekend, and we'll see you on Monday. Take care, guys. Goodbye.